Hello to all the debt warriors listening, and welcome back to another episode of Millennial Debt Domination. I'm your host, Katie Fata. We've discussed different credit topics in previous episodes, such as credit scores, credit counselings, and different ways to use credit. There's one aspect of credit we haven't discussed yet, but we'll be discussing in today's episode. Today, we'll be discussing credit bureaus. It's not uncommon to not know exactly what a credit bureau is and what they do. There are 3 credit reporting bureaus, and I'll be discussing who they are with today's guest, Christina Roman. Christina is the Consumer Education and Advocacy Manager at Experian, and spoiler alert, Experian is one of the 3 credit reporting bureaus. Christina joined me on episode 18 of the podcast, Financial Myths and Legends, and I'll link that episode in the description of this podcast in case you missed it. Christina and I will be discussing who the 3 credit reporting bureaus are, how they were established, how they get their information, and much more. Now, let's get to my interview with Christina. Hi, Christina. Thanks for being on the podcast today.
Hello. Thank you so much for having me. I'm so happy to be here.
Yeah, so I'm definitely excited to have you here, especially because today we're going to be talking about the credit bureaus, and I know you're very familiar with them. So I guess to get started, let's just let everyone know what are the 3 credit reporting bureaus and what do they do?
Sure thing. The 3 national credit bureaus are Experian, TransUnion, and Equifax. I work for Experian. Mm-hmm. These companies are also known as credit reporting agencies or consumer reporting companies. And one analogy we like to use when we explain the credit bureaus is that they operate like a library. Mm-hmm. So in the same way that a library stores books and checks them out to those with a membership to the library, the credit bureaus collect and store information about consumers' financial lives and behaviors as reported by the creditors. The information is then stored in credit reports or credit histories, which are then checked out when requested by creditors. Now, it's important to understand that the credit bureaus do not make lending decisions or develop the credit scores used to make lending decisions. To access a credit report from a credit bureau, a company must meet the membership requirements of the credit reporting company and have permissible purpose under federal law for accessing the report. So we can't just give anybody that requests your credit report. We can't just give it to them.
Right.
And the most common uses of credit reports are for lenders to offer credit, open your credit accounts, and then manage those accounts. Those are kind of what we think of, right, when we think about credit reports and credit scores. Mm-hmm. But there are other reasons that companies will need to access them, which could be maybe they're assessing your risk for insurance purposes, in addition to claims histories and other data to help predict which consumers will file fewer claims and determine their ability to make monthly premiums. Also, like your credit report could be used when you're applying for a job. So a poor credit history could affect your ability to get a job or maybe rent an apartment. And the credit bureaus store all that information about your financial life for you. So that's kind of a general overview of what credit bureaus do.
Oh, yeah, I think that's a good overview to get everyone started and introduced to the credit reporting bureaus. So Experian, Equifax, and TransUnion, those are the 3.
Yes.
So how were these 3 established?
This is a great question. And I feel like, honestly, it could be a podcast in itself. The credit agencies have been around since the 1800s. In the U.S., the Experian evolved from a vision of a man named Jim Chilton, who worked for his uncle's law firm. And his work put him in contact with local merchants who voiced concern that they didn't really know much about the people they were giving credit to. So Jim Chilton went from merchant to merchant in Dallas and took notes of how consumers paid, and he assessed their risk and ability to repay their debts. Believe it or not, he walked up with a notebook and just wrote down the information from the merchants at that time. So he went on to establish the Merchants Credit Association, and he began providing subscribing members with an annual credit reference directory. And the essential aspect of this process that would continue to be adopted by other agencies was that he persuaded merchants to pool their credit information on a confidential basis. And he was a stickler for accuracy. So before Jim's time, maybe they could say, like a merchant can say, well, this person is a drunk, but his dad will repay his debts, so you can give him credit.
Right.
Before Jim Chilton started working on this whole process and really creating accurate information, that was how they decided who to give credit to. So as credit became more widespread and people began making big purchases like cars, TVs, washers, and dryers on credit, it became increasingly important to have access to credit and good credit at that. So the credit reporting agencies had to evolve and become more efficient. And during the 30s, consumer credit files were stored on 3x5 index cards in roll-away filing cabinets that were rolled out during business hours and stored in the vault at night. That was data privacy back in the 30s.
Wow.
Yeah, and this was another system actually invented by Chilton. So when a subscribing member of a credit reporting agency would call for a credit check, he would call an operator, and the operator would write the consumer's information on a piece of paper and hand it to a runner who would retrieve the person's 3x5 index card, and the operator would read the contents on the card to the subscriber. And this was in practice, can you believe it, until the 80s.
Wow, really?
Yeah. So then Experian's roots can be traced back to a company called TRW. In the 60s, Simon Ramo, who represents the R in TRW, realized that merging credit reporting with computers would create an automated system that would help more efficiently aggregate and store consumer data. And this system sped up the processing and enabled the information to be interpreted much more easily. So by the late 80s, TRW became the first agency to cover all 50 states. And in the late 90s, TRW spun off to Experian, and we were acquired by an organization called the CCN Group out of England, and we became Experian globally. So today, Experian is the largest information services company in the world with operations in 40 countries. But the story of Experian's growth in the industry, when you look at how the three bureaus evolved, it happened kind of geographically. So Experian grew from south to southwest, TransUnion grew from Chicago and expanded through the middle of the US, and Equifax was based out of Atlanta and the eastern part of the country. However, today we're all national bureaus that compete across the country.
Okay. And then these are the only bureaus for the US, right? Or is it everywhere?
So we are the top three credit bureaus,
Okay.
but there are many other types of like credit reporting companies that focus on like different markets and provide consumer reports and risk scores that affect our everyday lives.
Right. Okay. Got it. And so will there ever be more than 3 bureaus?
That's honestly, it's hard to say
if
anybody else could rise to the level of Experian, TransUnion, and Equifax. But like I said, there are other credit reporting companies that provide consumer information to an array of businesses, like lenders, employers conducting employment screenings, renters conducting tenant screenings. Those are all different examples of credit reporting agencies, within the United States as well.
So out of those 3, which one was established the most recently? Do you know?
Out of the 3 credit bureaus?
Yeah, like which one became the most recently? Yeah.
I have to get back to you because different research says different things. I know they say because, Experian was established in the US, like it spun off in the US a little bit later than the other bureaus, but we are a part of like the original founding, companies. So it's hard to say, but I can get back to you with that answer.
So now that we've kind of established what the 3 bureaus are and what they do, how do they get your information?
The credit reporting companies collect and organize data about your credit history from your creditors and your bankruptcy public records. And the best way to explain this is to walk you through the credit cycle. So for us, the way we like to explain this is the credit cycle. It starts with you, the consumer, and you're an integral part of the credit reporting process because the credit reports are only created when you choose to use credit. The information you use when you apply for credit launches the beginning of the credit cycle. And the process begins when you open an account or you make payments as agreed on, or if you miss payments. So each month, the creditors update their records and share your account status with the credit reporting companies. And then the credit reporting companies update your credit history. And this is the information that is shared with potential future creditors. So if you kind of see the circle of how it works. Additionally, I mentioned that the credit bureaus also collect bankruptcy filings and add these to the consumer's credit reports because they're directly related to debt.
So, kind of to bounce off that, how does a credit bureau obtain your credit score?
This is actually a common misconception.
Okay.
So, contrary to popular belief, the credit bureaus are not responsible for your credit scores.
Okay.
The credit scores are determined by the credit scoring models that utilize algorithms to analyze the information in a consumer's credit history or the credit report and assign it a score. And there are hundreds of credit score models. Two of the most common credit scoring companies that you may be familiar with are FICO and VantageScore. And the algorithms that they use to create the scores are actually proprietary to them. So in some cases, like a credit reporting company may route a report through a credit scoring system as it's delivered to a lender. So it may look like it came from, like if you got your credit report from the Experian and it has a score that comes with it, it may look like, oh, this is my Experian credit score, but usually it is labeled FICO or Vantage score. And so it could be routed as part of the credit scoring system when it's delivered to the lender. And in other instances, a lender may receive your credit report and then use that information to calculate it, the score with an algorithm that's their own.
But but when you go to look at one of these bureaus, you can find your score there, though. It's just not like they made it up.
Yeah. So if you ever see us talking about like, oh, get your FICO score at Experian, we do say you can get your Experian credit report and your FICO score. So it is not a number that we give you specifically. It's routed through a partnership that we have with FICO.
So let's say you check all the 3 credit bureaus, but for your credit score, could it be different from each bureau? Okay.
Yes, it could be different. It's easy kind of to lump us all together and think that we have all of the same information, but you have to remember that Experian, TransUnion, and Equifax are completely separate companies, and actually lenders are not required to report to all 3 organizations.
Oh, okay.
Yep, your credit reports with each of the credit bureaus may have different information, and the differences are usually pretty minimal. I will say that. And additionally, I mentioned earlier that there's hundreds of credit score models. So there's only 3 credit reports, but there's hundreds of credit score models. So you may be seeing different scores based on the models used, and there's even different generations within a model. So I don't know if you heard someone say like, oh, I have my FICO 8 score, or maybe the housing uses the FICO 2 score. So there's different generations within FICO that or Vantage score that could be used. So that could be the difference that you're seeing if you get a credit score that looks different across the 3 bureaus. You want to make sure that it's the same model that was used.
Okay. Yeah, so we kind of touched a little bit on this earlier, but you could see your credit report on one of these through the bureaus, right?
Yes.
Okay. So what data do the credit bureaus include in your credit report?
Yep. Okay. So we kind of put it into 5 distinct categories. So the first is identifying information such as your name, your address, your date of birth, and social security number, which helps the lender find your information and helps the credit recording companies add and update information in your file. We also have employment records. They're not updated as part of your history, and thus are not a precise record of your work history, but simply another verification of your application information. We also have the geographical code, which is an indicator of the census tract location as reported by the Census Bureau, and that was added to help creditors ensure that they're complying with the Equal Opportunity Act and Community Reinvestment Act. Most companies routinely report their account information to all 3 credit reporting agencies and update it monthly. That's what I mentioned earlier. So your creditors most typically report to all three credit reporting companies. And this is a good thing because your account history is the core part of your financial references. For each account, the credit report will show your credit limit or the original amount, your existing balance, your association with the account, and if the payments have been made as agreed.
Mm-hmm.
It'll show public record information, and the only one we do want to emphasize that shows is bankruptcy information. Okay. And bankruptcy is the most negative entry you can have in terms of credit scores, but it may be the right thing to do if you have unmanageable debt and reset. We understand that, but it's important that it's still listed on your credit report. Mm-hmm. And it's important to remember that in time, the bankruptcy will be deleted and your credit history will recover. Mm-hmm. But it is there. So it's also important to remember that accounts are updated to show if you paid or satisfied the debt, but they're not deleted immediately when paid. So you could see a full list of your previous accounts. It's not deleted right away that's another common misconception. Some people will say, well, I closed this account, so why is it showing on my credit report?
So if somebody wants to check their credit report too through one of the bureaus, how often can they check it?
They can check it. You can check your credit report as often as you want, to be honest. And I think a lot of people think that if they check their credit report, it's going to hurt their credit score. That's a common misconception. You can check it whenever you would like. Experian offers you to be able to access your credit report monthly and your FICO score for free through Experian. You can also use annualcreditreport.com. And before the pandemic, you could only log in and access your credit report for free every 12 months from each of the three credit bureaus. Oh, really? But because of the pandemic, now you can actually access your credit report weekly through annualcreditreport.com.
Okay, that's good to know. Mm-hmm. Yeah, because I think that is a common misconception is that if you check your report, your score is going to be lower. So that's why I kind of just wanted to bring that up to let people know.
Yes, that's not true. We see that often, and we always try to emphasize, please check your credit report because that is a key way to make sure that everything in your credit report is correct, and it's the best way to manage your credit overall.
Right. Is there anything that can't be reported to credit bureaus?
Okay. So the credit reporting companies don't store your criminal background, your medical information, your buying habits or transaction data, your income, your bank account information, your credit score, as I mentioned that. So you have to request the credit score. And essentially, if it's not debt related, it's not in your credit report.
Okay. So, do banks check all three credit reports when you apply for a loan, or they just check one?
It depends on the type of a loan. Okay. Creditors are not required to check all of your credit reports with the three credit bureaus when making lending decisions. However, for decisions like home loans, they do check with all three bureaus. And often they'll review the reports from all three or even smaller loans as well. But like I said, it just depends.
Okay. I kind of just want to hop back into credit reports for a second because there's just a question I forgot to ask. What if you're checking your credit report and you see something inaccurate? Is there any way to dispute inaccurate information? How could someone go about doing that?
Yep. Your credit report from each of the three credit bureaus will come with dispute instructions. And if you were to access it from annualcreditreport.com, there's clearly buttons there that say dispute. But anytime you access your credit report, it will come with dispute instructions. And we encourage you to get a current copy of your credit report before initiating the dispute. So if you dispute a file online with Experian, we'll provide you with a free copy of your credit report, and you can go to experian.com/dispute to do that. And when you dispute information in your credit report, Experian is acting on your behalf to ask the lender to verify the information. And we're required by law to allow creditors 30 to 45 days to respond to the dispute. So the dispute must tell consumers to allow 30 to 45 days from the date it's received. However, the average processing time is usually shorter, and today most disputes are completed within 10 to 14 business days and often within 2 to 3 days. So it could be very quick, but we do have to give the lender time to respond.
Right.
And if you and the creditor can't reach an agreement about the status of a payment of an account, you do have the option to add a statement of dispute to the account. And the statement of dispute enables you to share your perspective or provide an explanation of the circumstances. And the statement will be included in your report every time your report is requested.
Okay. And that's also another importance of checking your credit report, is to see if there's any inaccurate information on there.
Yes, absolutely.
Yeah. So what other services do credit bureaus provide aside from, seeing your credit report and score?
Yep, we offer I mentioned earlier, you can get your FICO score. You can get your report is refreshed every 30 days. We offer credit monitoring alerts. So if somebody has filed for an account in your name, you'll be notified like, hey, there's a new account on your profile. You may want to check it out just to be sure. It's a great way to prevent fraud.
Right.
We offer free dark web surveillance reports. We offer credit card and loan offers matched for you with no credit card information being required. And one of our popular products or services that we promote often is Experian Boost, which is a way to help improve your credit score by allowing you to add your utility and telecom and streaming payments to your Experian credit report to help improve your score. So that is another product that we offer that could help you.
Mm-hmm. I think you answered all my questions about credit bureaus. Is there anything else that we didn't touch on that you want to bring up, or?
I just wanted to make sure, as far as the type of information that is kept on your credit report, I think the only thing I didn't get to, so we have accounts in good standing, closed accounts, later missed payments. I mentioned that your payment history is on there. And the other one is credit inquiries. Those are on your credit report as well. So whenever you apply for credit, you will see that listed on your credit report as well.
Okay. Yeah, that's definitely some great information. And I'll put a link to Experian and TransUnion and Equifax in the description of this podcast, so you can go directly there to get all the more info you need about the credit bureaus. But I thank you for being on the podcast today.
Absolutely. Thank you so much for having me. I loved your questions, especially the question about the history of the credit bureaus. That was really fun to go back and get that information for you. And I just really enjoyed that. So thank you so much.
No, thank you. Thank you for taking the time out of your day to talk to me. I'll have to have you on again. You're a repeat guest. So
Absolutely.
Thanks for coming back.
I'd be so happy. Anytime.
A lot of people might be unaware about credit bureaus and what they do, but after this episode, those people are now well informed. Now we've established that 3 credit reporting bureaus are Experian, Equifax, and TransUnion. And as I said during the interview, I'll put direct links to all 3 in the description of this episode so you can find out more about each one there. I had asked Christina in this episode which was established most recently, and she said she would have to get back to me on that. So she was able to get back to me and do some research and discover TransUnion was technically the most recent one established. Experian traces its roots back to Jim Chilton, who was one of the original founders of the credit reporting agencies in the 1800s, and TransUnion started in the late 60s. I really enjoyed learning about the history of how the bureaus were established. I didn't know they had been around since the 1800s, and it was so interesting to hear Christina break down the full story. If you're looking to find your credit score through all of these bureaus, don't be alarmed if you find a different score at each one. Each bureau uses a different credit scoring model. The number will most likely be similar at all 3, but they'll probably be a different score. Also, you can check your credit report through the credit reporting bureaus. Checking your credit score is essential because you'll be able to stay on top of any fraudulent activity. As Christina said, there are other services the bureaus provide aside from credit reporting, so make sure to check out those as well. I'm also going to include Christina's social media handles in the description of this episode. If you enjoyed hearing her on the podcast today, or if you have any other questions for her, you can let her know there. With that being said, that wraps up another episode of Millennial Debt Domination. Please follow the podcast wherever you're listening. And if you're listening on Apple Podcasts, please rate and review us there. I'll talk to you next time, millennials, Gen Zers, and everyone else listening. Bye.